Rick Santelli standing by at the CME in Chicago. He's going to be ready for the numbers.
Yes, non-farm productivity, Mike. These are fourth quarter preliminary numbers, expecting 2.4%. Hey, better 3%. Productivity is the special sauce for the U.S. economy. So said Alan Greenspan. 3% is the best quarter going back to, well, the last quarter of 2021 when it was over 4%. And year-over-year productivity, of course, is gaining a bit as well. Unit labor costs, a little less than expected. That should drop rates just a bit. We're expecting 1.5. They come in at 1.1%, and that is the smallest level on a month-over-month change since March of 21. So that's excellent news. And if we look at initial claims, expecting 195,000. We bested that, 183,000. And, of course, bad news, good news, good news, bad news when it comes to anything on the labor market. 183,000 is the lightest going all the way back to April, third week in April of 22. And if we look at continuing claims, we're expecting 1.684 million, 1.655 million, so 1,655,000. That is a bit less than expected. And once again, that may be putting a little pressure on rates, but they're down 7 basis points here, hovering here at 335 on 10s. There is a subtle revision, 1,655,000. It actually equals what we had the first week in January, right on the nose. We're going to continue to have data points. We know the ECB raised 50 to 3%. We know the Bank of England raised 50 to 4%. And we know whether it was the 0.25% yesterday by our central bank, in all three instances, the sovereign debt of those countries' rates fell. And that gives us some glimpses into the psyche of investors who continue to think that the worst of pricing pressures may be in the rearview mirror.